Hello, and welcome to the Teach Me Forex Swing in Position weekly wrap-up session. This is January 24, 2009 edition, so welcome back everyone. Let's start right away by checking out results for last week. We were able to produce 81 pips out of our 4 trades, and that was good for 8.5% return on investment cumulative inside of one account. Now let's look at this week. This week is much better. 763 pips for a 68.9% return on investment based on one account. So what does this mean really as far as money is concerned? You may not know what a pip is. Well, we'll tell you what it translates, what this could have translated into for you. So we do this by looking at 3 hypothetical traders: Peter Pipper, Susie Lovelots, and Bubba Big Shot. They all have a thing in common, that they all took the Teach Me Forex graduate program, and they all attend the swing in position on a daily basis. The only difference is they didn't all start trading at the same time. So here's a bio about Peter. You're more than welcome to take a look at. Peter started the year with 2 trading accounts of $500 each. Here's a bio about Susie. You could take a look at Susie, and Susie started the year with 2 $2,000 account in the swing in position. And then we got Bubba Big Shot. Here's his bio, and Bubba started the year with 2 $10,000 trading account here. So we've got 1 compounding account, 1 reward account. So let's break it down for this week. We had 11 total trades. 7 of them were winners, 4 of them were losers. Our total pips again 763. And if all those trades and pips were taken inside of one account, this would accumulate to 68.9% per percentage risked, if you understand money management. Here's the real breakdown, the itty bitty breakdown here. So let's take a look at it. We've got a couple of big kahunas, especially this pound 15 minutes, 253 big ones. It was followed closely by the yen 15 minutes at 176, and we had some on 106 on the Aussie. We had 132 positive pips on the Kiwi. And, you know, we have some small ones, some 49, some 20s, 77 there. But where I'm going with this is take a look at our losses. We've got minus 15, a couple of minus 10s, and then another minus 15. That's what's happened when you trade with high reward to risk ratios. Your risks are small, your rewards are big. And this speaks for itself. So now you're asking, did our traders take all these trades? Of course they did. Because in order for the probabilities to play themselves out and be reflected in the accounts, we must take all the potential setups offered to us. 11 setups over 5 trading days. Well, that's only a couple of setups per day. So not too much time to manage. Alright, so we said that we do manage 2 different accounts inside of our swing and position team trade room. Well, our account number 1 is our compound account. So our goal is to compound 10% in this account and then close this account. There, sometimes we have to compound 11, sometimes we have to compound 12 because the trade is open and it's there. And the rest of our trades will be taken in account number 2, our reward account. And there's no limit on how much profit we'll handle. So let's go see how our traders did fare using the swing and position money management rule this week. So Peter started the week with it is a compound account with 542.50, ended with 611.40. His reward account started with $500, didn't touch it last week, but this week ends with 781. So a profit of 304, well, just under $350. And when you combine this profit over 2 accounts, that's an average of 33.6 on your total principal because you traded it over 2 accounts. So Susie started the compound account with 2170, ends up with 2445. And on the reward side, Well, she did really well. 2,000 transformed in 31.24, and again that accounts for 33.6%, a total profit of just under $1,400. And then when you look at Bubba with his big accounts there, started with 10,850 on the compound side, ends up with 12,228, and on the reward side, well, takes it a full 5 grand higher. From 10,000 to over 15,000, almost 16,000. That's just under shy of $7,000 of total profit. And when you're spreading the 68.9% over 2 accounts, it translates to 33.6% overall return on investment. But if all the trades are taken in the same account, it's 68.9%. So again, 11 trades, 7 winners, 4 losers, 763 pips return on investment. If all the trades are taken into one account, 68.9%. But we're even more conservative. We split it all over 2 accounts. How about that? And now, are we expected to take every single one of these trades? Yes, of course. To the exact pip, I would add, because the money management rule in the swing and position phase are fully mechanical. They do create the exact same result no matter who's managing the trade. Plain out. So we believe in teaching you how to fish, because we know that give a man a fish, he eats for a day. Teach a man how to fish, he eats for a lifetime. And we want to be your Forex fishing guides. There, we want you to eat for a lifetime. And if you're wondering who we are, what we do, how we do it, or how to join us in our swing and position team trade room, please go ahead and visit us at www.teachmeforex.com and help us fulfill our vision, please. Let us create the largest team of successful online currency trader in the world, one trader at a time. Will you be next? And finally, from the whole team at Teach Me Forex, have yourselves a very good weekend.